Hey, this is Tom Nash, and the long-awaited 10-year, $162 billion Apple electric vehicle. That project is gone. It's finished. It's canceled. It is kaput.
Apple winding down its electric car efforts.
For about a decade and billions of dollars in spending. Look, this decision comes after years of leadership changes and deviations from the original dream Apple had of a self-driving electric car. They were calling it Project Titan internally, with no steering wheel or gas pedals. At one point, Apple even thought it could start selling its car by 2020.
Now, the crazy part about this video is that my conclusion about the future of Apple is not what you think it is. So hang on, I'm going to explain in a second. Now, I do want to mention something here which is a little bit unusual. Ever since the Tim Cook era started in Apple, we haven't really seen this dude fail. Now, he hasn't been the most innovative CEO in history. To be honest, he's actually COO, a chief operating officer running a company. But his excellence in executing and implementing was second to none. I can't remember an Apple failure like this or an Apple cancellation of a massive project like this, at least in recent history. So it's a first for them, no doubt. I do think that what happened here is that Apple looked at this project and said, look, even though we spent a decade on this, even though we poured $160 billion into this, the truth is that even if we charge $120,000 a pop on every vehicle, number one, we're not going to make any money off of this. And number two, the amount of effort, money, resources, and time to build this is going to be excruciating. Why spend so much time, money, and resources on something that's never going to make us any money? It is literally impossible to make money off of selling electric vehicles. I think that's the conclusion of Apple. In fact, that's the conclusion of most automakers in the world right now. Very few are actually profitable on their EV division. Now, I do think it also shows you a lot about Tesla, because if Apple, a company that's used to selling premium products, selling value and not price, that could have sold a $100,000, $120,000 vehicle, no problem. This company is saying, hey, even at $120,000, this thing is not profitable. Just goes to show you that Tesla, with $35,000 to $55,000 a pop, which is what they charge on Model 3 and the Model Y, have the best margins in the entire auto industry, not just the EV industry. They have the holy grail, they have the secret sauce, and people still refuse to understand how massive it is that Tesla is not just profitable off of EVs, and the only one to do so, including the Chinese that haven't yet figured this out. That Tesla not just is profitable, it is the most profitable out of the entire auto industry, which is absolutely insane to me. Now, what I find also amusing here is that while we all know that famous story about how Elon Musk tried to save Tesla. He tried to get Tim Cook to buy Tesla. Well, rather to have Apple buy Tesla. And he tried to arrange a meeting with Tim Cook. And Tim Cook basically would not take the meeting. Imagine not even taking the time to give Elon Musk a polite no. Not even taking the meeting. He was too big for that. Now, obviously, that's a point of regret for Apple at this point. But, nevertheless, you live and learn. And also, I don't think that things were that bad for Apple anyways. It seems to have worked out fine for everyone. I'm sure Elon Musk is happy about not selling the company at this point. Now, another thing about Tesla which is peculiar is while this announcement came out yesterday, Tesla is announcing that their Roadster is going to come out in 2025. And it's going to have a 0 to 60 of under 1 second. Now, just to think about it, 1 second car blows my mind. And the crazy part about this is that Elon tweeted, wait, this is not even the most interesting thing about this car. It's going to blow your mind. So I know that Elon likes to promise a lot. I know. But hey, so far, on every vehicle he promised, he delivered. It's a massive fail for Apple. It's a huge win for Tesla. Just goes to show you how important the work that Tesla is doing and how good they are at what they're doing. Kind of also shows you where the market is headed as far as who's going to dominate the EV industry for the next 10 years. Tesla, BYD, maybe some other Chinese companies, VW, perhaps Toyota if they pull their stuff together at this point. We'll see. Now, about Apple, I know a lot of people tend to be bearish when you have failures like this. There's going to be a lot of people going to be bearish about Apple, at least for a while. The question is, do you think that Apple is going to be gone by 2033? I don't think so. I think they're going to be still around. So if you don't think that Apple will be gone in 9 years, then why are you so bearish about this company? We're talking about a company that has a huge business, a stockpile of cash, and it doesn't seem to be going anywhere despite flunking out of EV school. Let's talk about it. Now look, The Vision Pro, I think, played a huge part in what happened here. I think the vast success of the launch of the Vision Pro, which was essentially the worst product of that sort that Apple will ever build, the success of it, the enthusiasm from it, and the potential they saw basically got Apple to focus on that more than another project, which is doubtful it's going to ever make money. It might be an extremely unrewarding exercise. But on the other hand, the Vision Pro seems to be going in a very good direction. So it only makes sense to kind of shift your priorities and resources and employees to a better project. I think Apple also understands that the AI stuff are going to be way more important than building a car. And with the massive growth in the potential total addressable market in AI, in services, in AI-based services, in the Vision Pro, in VR, enhanced reality, whatever you want to call it, Apple has way more sources to make a lot of money with higher margins than to build a vehicle. And it only makes sense. I don't think it's a bearish thing that they've abandoned this project. In fact, it was long overdue. I think a lot of ego prevented Apple from pulling the plug on that project about 3 or 4 years ago. They should have done it a long time ago. The fact that they did it now only clears up a lot more resources for them to focus on what will make them a lot of money. Now look, if you examine Apple from a fundamental perspective, I mean, the company is spotless. Under 1% of short interest, 100 billion in net income per year, 26% of net profit margin, 54% return on capital, and it's currently trading at 7 price to sales, at under 30 price to earnings. Apple is not trading an expensive multiple given the amount of money they got coming in and the amount of profitability they have in the company. Now, the current share price of Apple basically reflects an annual growth of about 10 to 15%. Nothing out of the ordinary for a company like Apple. I don't think that Apple is hyped like Nvidia and like other companies in the market. I think they're priced exactly where they should be. And if you take a look at the self-valuator here on Stock MVP, stock-mvp.com, a software that you can use to run your own models, your own valuations for every company. Get yours for free for 1 week. Try it out. Tell me what you think. stock-mvp.com. So if you go to Stock MVP and you actually apply the self-valuator on Apple, you'll find out that it has 3 base cases. The bear scenario shows us a share price of $160 versus the current $180. The middle ground shows us $244, and the upside shows us $327. That's a 5-year price target for Apple. Now, obviously, this isn't gigantic, ginormous numbers that's going to make you $1 gazillion. That's not the point of Apple. Apple isn't going to 10x from here. We kind of all understand that. But what this model shows us, as well as the other stuff we just saw on Stock MVP, including the ratios, including the multiples, including everything, is that Apple has a great business. Apple is not going anywhere. Apple is not expensive. And Apple has plenty of upside. Now, again, you do you, I do me, you do your own research, use Stock MVP, and tell me what you think. Now, if you actually want to get better at this stuff, instead of watching videos on YouTube on the top 5 stocks to buy now, you actually want to get better and do this for yourself and actually make money off of this. Well, you got to learn some skills. You can do it for free, as I mentioned multiple times before. Plenty of resources on YouTube, on Google, but you can also join our academy where we teach you everything you need to know, starting from how to read balance sheets, how to read financial statements, how to do a DCF valuation, how to actually analyze companies as a professional, and how to make smart decisions, discipline, all that good stuff. Join the academy, patreon.com/Tom Nash. And obviously, you're more than invited to join our Discord community, discord.gg/Tom Nash. It's absolutely free to join. We would love to have you there. We already have 7,500 members. We're trying to get to 10,000. So join us. Let's talk Tesla, Palantir, Apple, the market. Join us. I'll see you there in just a minute.